Hi YouTube, it's Shaneli here. In this video, I'm going to be discussing how a lot of different economists have been projecting that there's going to be another financial crisis, another stock market crash like the one that happened in 2008, this year in 2019, or in 2020. Depending on what you read, you might see 2019 or 2020. But what I'm noticing is a lot of people have been writing to me saying, why would I continue to invest when the stock market is dropping? Then that means that my money is losing value. Why would I do that? Also, you're watching your money drop and it's really hard for you to stay invested. So this is just a quick example that I learned by reading the book Simple Path to Wealth. The Simple Path to Wealth was written by J.L. Collins. It is a really great book and I highly recommend you check it out. I'm going to link it in the description box below. But basically what he says is that you have to think about the stock prices that you're paying. So when you're investing money and the stock market is up, that means that the prices are really high. And a lot of people are buying things because the stock market is doing well. Stocks are doing really well, giving people profits, and so they want to participate. But the second that the stock market starts dropping, what exactly does that mean? That means that the prices that you were paying for those stocks are dropping. That means that every individual stock is now cheaper than it was. All the ones that are dropping are cheaper than they were before when the stock market was doing well. So you could think about this like you're going shopping for stocks. It's just like when you're going shopping for clothes or when you go shopping for food. If you walk into the supermarket and you see, or to the store, and you see that you were there yesterday and everything was twice as expensive, twice the price. Now today, everything is half off. You wouldn't get mad about that and stop buying food and clothes. If anything, you do the opposite. You get excited, you get hyped that everything is half off, and you start buying more food and more clothes so you could save money or so you can get more for your money. That's the idea here. It's the stock market is basically having a huge sale. All of the stocks are getting cheaper. But the problem is that who likes to be unsure about when the prices are going to go up? Not a lot of people like that uncertainty. So if you can't really, stick it out, then you won't benefit from the fact that the prices are so much cheaper. Now, when the prices start going back up again, you're going to start trying to buy stocks because the stock market is doing well. But really what you're doing is paying more money for things that were much cheaper a couple days ago, a couple weeks ago, whenever the stock market wasn't doing so well. So that's why it's really important to remember that every time you invest in the stock market, you're purchasing stocks for a certain price. And when the stock market goes up, those stock prices are getting higher. And when the stock market drops or goes down, the stock prices are getting cheaper. The stocks are on sale. So you should take advantage of that sale, and you should go to the clearance rack and pick all the ones that are low, like cheap price. Like you should basically be trying to take advantage. What I do is I just don't change my strategy. Every single month, I make sure that $458.33 goes into my Roth IRA. Well, that was for 2018. In 2019, it's going to be $500. So every single month, $500 goes into my Roth IRA. Even if I put that money in and the stock market drops, next month, I'm going to still put my $500 in like I always do, because I know that when it goes back up, the profits will come. So if anything, just stay consistent, keep doing what you were always doing, and don't let the activity going on in the market and the news and the radio and everybody talking about on social media how the stock market is dropping. Ignore all that noise and just pay attention to the fact that you understand that when you invest, you're getting stocks on sale, and you should be excited about that. The thing is, you got to make sure that you remember you don't know how long the sale is going to last. It could last a couple days, a couple weeks, a couple months, a couple years. You never know. So you just have to make sure you have an emergency fund with money for emergencies, and make sure that you only invest money that you're not going to need for a few years. So make sure that if that sale lasts 2 years or 3 years, the 4th or 5th year, you'll be okay. But that means you don't need that money. You're going to need to make sure that money you put there, you won't need for a few years. So I hope that helps everybody understand why it's really important to just, even though there's a bear market, continue to invest, especially if you're a long-term investor. If you're a short-term investor and you're looking for a return in the short term, you might want to check out some high-yield savings accounts instead. But if you're in it for the long term, you shouldn't even be paying attention to whether the stock market is going up or not in the first place. So if you like this video, you definitely want to check out Jim Collins' book called The Simple Path to Wealth. I've talked about it on my Instagram channel, and it's a really, really awesome, simple to understand book, which I love. I've recommended it to friends and family. Definitely go over and follow me on Instagram, follow me on Facebook. Check me out on other social media platforms. I like to engage with people. I like to meet people, find out who you are, why you're interested in finance. And if there's anything that I can post to help you out, if you have specific questions, please don't hesitate to reach out to me. My email is MissBeHelpful@gmail.com. That's all I have for you guys. Till next time, peace.